Okay, everyone, welcome back to another episode of Line Your Own Pockets. Today, we're going to talk about what it takes. Like, what are some innate qualities or learned qualities, I guess, to becoming a successful trader? What can kind of predict success? Dave, I think, had a good example to get started here. So let's just dive into it.
I've had this coaching business for a while. I coach a lot of traders. And one of the things I did right off the bat is I have a money back guarantee. So if you get to the end of the month and you don't like the service, for any reason, I give you your money back. So, like, a lot of the pressure's on me to make sure you do well. And so I'm totally incentivized to make sure the trader does really well and is really happy with what's going on. The other thing, I have another model where that I don't put on the website, and that's where I literally don't get paid unless you make money. So there's another big incentive.
It's a huge incentive. Yeah.
There's no reason for me to take anybody on if I don't really think that they're going to do really well. So I've talked to a lot of traders. I've worked with a lot of traders. I have a pretty good sense now because of these incentives I've given myself to really determine if somebody's going to be good or not. And not just, whether they can afford to pay my fees, whether they can, whether they're going to stay around a while. Like that's not the incentive. The full incentive here is you do well and you make a lot of money. So like I said, I have to have a keen insight into whether somebody's going to do well or not. Otherwise, it makes no sense for me to work with them. And I've gotten a lot more discerning about who I'll even take on because of this.
Well, and we talked a lot about the incentives just kind of control everything, especially in this game more than anything else. It's one of the things I actually like about trading is that there's no office politics about whether or not it's not, oh, I believe the same weird stuff you believe, so you're going to pay me more. It's none of that. It is pure, if you were right more often than you were wrong, or risk reward or whatever, you make money. And if not, you don't. So that's interesting. So you actually have a motivation to disqualify people more than anything else for some of these models, because it's not worth your time just to go for the money back guarantee thing. It's not worth your time to work for someone at the month if you on day 29 they just go nah, because I'm sure you're not like fighting with them about it. So they literally could just be someone who just wants to take advantage of you and has no real interest at trading at all. And for really a lot of reasons that could be outside your control, maybe they just you're telling them all the things they need to do to be successful at this, and they've just decided they don't want to go through it. And you don't find that out till day 15, and then you've wasted kind of half a month on this person that you could have done on someone else that would actually pay you.
Yeah, and one thing that I'm particularly proud of, nobody's ever asked for their money back. So I know that I'm doing a great job, and part of that is identifying the people that can do well.
I would say that's a huge part of it.
Yeah. So I thought we would go over some of the qualities of the things I look for in a way that people can pick up on and apply to their own trading as a result of this. So I've got a few things here. I've got some notes here that I'm looking at that.
I'm good. So I'm sure we'll go into the specific qualities, but I'm specifically now thinking of the Turtle Traders book, or Trading Spaces. I guess you could also do the movie there, in which for those who don't know, just a quick summary. In the Turtle Traders, there was this very successful futures trader who had a partner, and they just kind of had a little bit of a disagreement whether or not some of the traits to become a successful trader were innate, or whether or not they could be taught. The successful futures trader said, no, I can grab a bunch of people from middle of nowhere. I can teach them my system, which is a basic trend following system, and they can do fine. Long story short, he was right. There's still Jerry Parker, who's in his 70s now, is still trading his style and runs a ETF and a hedge fund, and he's very successful his whole life running variations of the same systematic trend following approach. Which side of that do you land on based off your thing? Are these innate qualities? Are they learned qualities? Bit of both? What do you think?
I think trading's not for everybody. No. Maybe so. Another important thing to point out that I think is a really critical piece here. So the turtle trading thing, they're teaching a specific strategy. I think you can be successful that way, but the way you're going to be really successful and make a lot of money is have the ability to come up with your own strategies. That is an absolute pillar of real trading success, and that's one of the items here that I'll go over.
Well, and yes, so the Jerry Parker, and again, you can look him up. He's very public as well. Who's done it has done just that. There's it's variations of the same. It's trend following, right? He's a trend following purist. So in some respects, it's buying things that are going up and then holding them until they stop going up, right? So that the premise always remains the same, but he's made changes when it comes to hold times and instruments traded and all kinds of things, and that's kind of happened slowly throughout his career. And I think that might have been what separated him from some of the people who had success under Richard Dennis and then maybe fell off because they were dogmatic about, I'm going to continue to trade the same way. And we got to remember, this is, I believe, the 60s that this started, right? So of course there's been a lot of changes in the market. So yes, although he's trading roughly the same idea, there's just so many nuanced little changes that have kind of happened throughout that I think has separated him from a lot of the other people.
Yeah. All right. So let's talk about number one. So, and the way you should think about this is, a lot of traders I will talk to and like figure out where they are on their journey. And there's different phases that you go through. And this comes directly from my journey as a trader and the things the inflection points that I went through. And when I started coaching, my thought was, I'm pretty sure there wasn't anything real special about me that made me good at it, but I wasn't 100% sure about that. So the people I work with are typically, they've had some success and they're trying to basically add a zero to their annual profits. So, going from 5 figures to 6 figures a year, 6 figures to 7 figures a year. That's the change they're trying to go through. So to get to the point where I think you really have a sort of meteoric rise, you have to have had some success before with some strategy or some trading. So a lot of the traders I work with have one strategy that they're trading, but they're looking for two, and that's where they're struggling. So somebody you sort of have to have some experience just to understand what trading's about. It's hard. I'm going to be really good at this. It's going to take some work. And if you don't have a good grasp of that, then you're not going to be good at it.
Well, and I'd say it's the same with a lot of the clients that come to me. They've usually come into some of the get rich quick kind of stuff, and they've been there and they failed at that, and they've had the guru that said they're going to make $1 million, and then at some point they realize that that's not how it works, and they have to get that first strategy. But I would say that's quite a bit. By the time they get to you, if they have that first strategy down, that's a lot of the kind of hardest part, right? If you look at this, I think a climb up a mountain, that's like that first big peak that you've gotten to, because we know that most traders will never get there. They'll never get to 1 iota of profit ever for anything across anything. I also was wondering, when you're saying that, is the speed at which they got there a determining factor? Because I could see the same two people come to you and they've realized, okay, you don't just read the news and buy what you say in the news, whatever. And they both come to you with a very basic strategy, a gap fade or whatever it is. One of them is like, yeah, I figured all that stuff out, that was crap, like in a month. The other one's like, I've been banging my head at the wall for 5 years, and then I finally figured out I should be systematic about it. Do you put any weight on the speed at which they got to that?
That's a really good question. I've never quite thought about it that way. So a lot of what it reminds me of, though, is a lot of traders or a lot of people that come to me have had really good success maybe in another industry. Like they've created a company on their own and they've sold it. So then now they've got a lot of money. They believe they can use what they've learned there to become a good trader. So they've had this success in one area, in something that's really hard, starting your own business, running that is really hard. So they have some sense of what it's going to take. Like it's not, like you said, they know this is not some get rich quick scheme. So yeah, in that sense, I think maybe their learning curve, like they haven't traded for a long time, but they have had some success that's really, like I used to, when I was a CTO at Trade Ideas, one of the things I would look for in hiring people, have you put yourself in a position where you are the only one in the world that can solve a particular problem? So you can't escalate to tier two. So that means, you're running a business, you're providing a service like a web service online or something where you're the man.
Yeah,
You can't escalate to somebody, right?
you figure it out. And there are those, and I know what you're getting at too, because we all know those people who you can kind of task them to do anything, and if their motivation's big enough, they'll figure it out regardless. Yeah. And then there's those people who will just stop. Like they'll just quit as soon as they can't get help with something, they can't get whatever. So that's, I guess, grit or determination or whatever it is. But yeah, I see a lot of the same things, not just with trading, but just life in general. Like the guy you can say, I need this done, and that come hell or high water, it's getting done. That's just a huge talent that, I think carries forward in trading. But you're right, it would be the same kind of trait you'd need to do your own business. It's the same kind of trait you need to really even be high performing in kind of any career, I'd imagine.
Yeah, and there are people that seek out that position. They want to be in that situation. And when you're in that situation, there's going to be times where the pressure is on and you just have to get it done. You have to figure it out. Trading's a lot like that. Like you're going to be in a situation where you're in a drawdown and nobody's going to be able to come and tell you exactly what you should do. You have to have put in the work to understand how to trade through that drawdown and have the confidence to do that. And that's really hard. You're going to be put in positions like that. I think that to have been in that situation before is very valuable, and it's not quite a requirement probably, but it's close. Like it's definitely going to help you.
So yeah, then I guess you could debate all day long whether that's nature nurture. I guess it's not really our job, right, to figure out whether that's something that is taught to you over time or something that you're born with. But yeah, that makes perfect sense to me, right? That seems like something that, whether I'm hiring for something or whether I'm trying to determine whether to be a good trader, that has to be there. Like, just absolutely, because there's no world in which you're trading is sunshine and rosy all the time, right? Even if it's just the patience to sit through a drawdown, some of that is determination, just going and seeing that kind of P&L tick down every day and continuing to do the correct thing throughout, which I think is a hard thing to do for a lot of people. So even if it's just the determination to stay the course, I think that's a big one.
Yeah. So number two, the next one is you've taken full ownership of your trading. So there's an early phase you go through where you're in a trading room, you're following what somebody else is suggesting, you're looking over somebody else's shoulder. You haven't at all taken full ownership of your trading. Like, what happens if the guru is on vacation or, doesn't or quits? You have to be able to come up with your own ideas and just have full ownership of your trading. Nobody's going to care about your trading more than you are. So you have to own that, and that's a phase you go through. And it's a phase you have to go through if you want to make a lot of money.
Well, and that's what I was going to say. You can't, not to poo-poo I initially got on board with the guru. We're not saying that's, and you can argue whether or not it's the good place to start or not. But if you are then blaming that person for everything bad that happens, then it's like, okay, well, you put yourself in that situation. And if that person was a truthful person, they probably already told you that there's going to be drawdowns and things like that. If they're one of the guys who say, I turn $100 into $1 million every 6 months, well, you probably have different problems to deal with. But yeah, and you got to go there. And I see that all the time as someone who spent time in those rooms. There were the people who ask questions to learn, Like, why did you do that? Why? What were you seeing here? What was it that was happening? Versus the one who would come in and they would take a trade, and often it would maybe be different than the guru or the leader or whatever said. Then they're really mad about it. And you could almost just split those people right away and say, okay, this guy's got a chance because he's trying to figure out the why behind it, and this other guy is just looking for someone to hand him a $100 bill.
Yeah, yeah, they're sort of outsourcing the blame, right? They want to blame somebody else for.
Well, and we could
bad
go back
decisions.
to the podcast we did about the people who think that as soon as they put out a stop loss, that there's some organized being that comes and moves the price of their stop loss. That's the same thing. Those people, they're not taking ownership of, I put the stop loss here and it got triggered if I'm getting stopped out too much. There's that same idea of one will look inward and say, hey, am I putting my stop in a stupid place? And then the other one will go, okay, no, there's some sort of Illuminati organization coming to get my stop loss. And those two, right, it's very much a split reality happening there as well.
Yeah, that's a great point. We should put the link to that episode in the show notes. That'd be a good one to look at there.
Fun one.
Yeah. All right. So number 3, you have a healthy attitude about risk. So, people grow up with different feelings about money. They have different emotions about it. They have different upbringings with, they maybe had wealth, maybe they didn't have wealth. It's very important how you think about risk. And because, like I've said before, trading is really easy when you trade small amounts of money.
Yeah.
It's not really easy, but it's one thing to trade with trivial amounts of money. But we're in this to try to scale up a strategy and make lots of money. And to do that, you're going to have a certain way of thinking about risk. Because a lot of times traders will, you'll hit a ceiling with the amount of risk you can take on. And so you have to have a unique way to think about it. So, a lot of the traders that come to me for help a lot of them come from the poker industry or the gambling industry. So they have a very good sense of risk. They understand risk really well. And I like working with those guys because that's not half the battle, but I can already tell that, okay, they have the right mindset to be really good at trading. They just need the foundation and the tool set to be able to do it well.
Like how you said, a healthy, because there's two extremes there, right? There's the guy who will never risk anything, right? He'll never increase his risk size. He'll never, really kind of go for the fences in things he has convictions or belief about. He'll never develop a plan to size up his risk. And then you have the other guy who he always is sizing up his risk regardless of whether or not he has the data to back it up. So it is a needle to thread, and it's probably I would say the most personal part of trading. I think you could give the same trading strategy to 10 people, and success or failure on that strategy would have to do with their thinking of risk, right? Just go back to the turtle trader stuff, right? These guys are trend followers, which by definition means you have to be in a massive winner at periods of time and have that come all the way back to cost you money. And that if you were someone who just immediately felt that need to take that risk off the table all the time, you will not win at the trend following game, because you have to have that, where there's going to be people out there who look at that and just say, man, if I cash in right now, I'm going to make X amount of money. And then they never get the full, the full amount from it. And then they can never succeed at that game. So yeah, it's, I think very, very personally, like you mentioned, backgrounds and even current financial situation. It's why generally people that trade well, they don't really need to as much, because they can take that, they can take that off themselves, where they're not looking to pay the next month's rent with this trade. So there's a freeing aspect there that I think you need.
Yeah, I think that's true. I'll allude to that in one of the later bullet points here. But I like what you said about, there's some people that you can tell they're trading for a high. They're looking for the risk, and that's not a healthy attitude about risk. Like if you're doing this for gambling or for entertainment, you're not going to be great. You're not going to make a lot of money doing it, and you're not going to have long-term success doing it.
Yeah, and it's I one of my mentors always used to just tell me over and over and over again, trading should be boring. Right? It should be
Yeah.
monotonous and boring, and you shouldn't get too excited when a trade wins. You shouldn't get too bummed when a trade loses. It should be, relatively boring, and you come in every day knowing you're going to do the same thing you did yesterday. And for us, it's even, I guess, easier to come up with these routines because we're not actually pushing the buttons to make the trades. But yeah, it should be that kind of boring, repetitive kind of thing. And he did that for two reasons. One, so that you weed out the people who are there for excitement. But then the other, to kind of let yourself be a little bit happy from time to time. He said eventually you get to the point where you'll make a ton of money on a trade, and you won't give yourself 2 seconds to say, oh, that was fun. Right. And you shouldn't get too excited, but yeah, you got to remind yourself, I guess, to have some fun every now and then.
Yeah. So I have gotten rid of people I'm coaching, let some people go because I could tell they were doing this for gambling. They weren't, they were not going to be in this for the long term. So it's important to think about that. And I like what you said about general finances, that a lot of times the best thing a person can do is get their finances in order. That's going to be by far the best ROI from them before they even start trading. So there's a certain person like that.
Yeah, well, and that's just, again, if you have to make a trade to live, then there's just so many bad incentives there, right?
Yeah.
It all, means it does you're going to just force trades, right? You're going to intervene with your bot because maybe you look at your bot and it's noon and it hasn't done anything all day. Well, probably the correct answer is not to do anything because there's nothing that met your criteria. We'll go, oh, well, nothing's going on, so I'm going to take a little bit of risk here or there because I have to. And yeah, that just becomes a cycle because, of course, that trade's going to lose. And then you're going to have to make another one to make up for it. And that one's going to lose. Or it's just not, it never works out of the boredom trade, or the trade for the need of income is never going to be a profitable one for you.
Yep.
It doesn't work.
I agree. Okay, let's go to number 4. I think you'll like the first half of this, and you might take issue with the second half. We'll see.
All right, let's go.
You have to be open to automation and day trading. So one of the big inflection points in my career was moving from swing trading to day trading. I just made a lot more money doing that. So that's the path, and most of the traders, all the traders I work with, a huge part of their income is day trading. And automation is a huge inflection point in my career, and I see it day in and day out with the traders I work with. The more they're automating, the better they're going to be, and the more they're day trading, the more money they're going to make.
Yeah, no, you nailed it. I agree with the first one, right? Automation is everything. Yeah, the day trading, again, I day trade, right? And the thing I'm currently working on is more day trading things, so I'm not speaking so much for myself. I think there's plenty of money to be made for people who are swing traders out there. I think there's lots of examples from that Qualamari guy who's up to 100 million now from all swing trading. I think there's lots of examples out there. Again, I think our argument just resolves itself on this once 24-hour markets become totally a thing and there's no such thing as one or the other. But yeah, I don't know if time frame is necessarily the constraint to as many people as kind of you think it is.
Yeah. Well, I'll give you a prediction here. I think that the vast majority of your trading income is going to be day trading in the next year.
We'll see. We'll see. And my argument, again, will always be the same of why not both, right? Is going to be, if you, just like I think you think that I'm leaving money on the table, not being more active intraday, I think you're leaving money on the table, not holding anything overnight. So I think the best argument for the people out there is explore both. But yes, I think a lot of the issues with day trading goes away with the first thing, with automation, right? The complaints that people have from day trading are, I have a job, I can't sit here and stare at 6 monitors and hit buttons well, you don't have to. Or, I don't think that fast, or my emotions don't regulate that quickly, so I can't be super active. Well, you don't need to, right? So I think for me, that's what, and I remember we had this conversation ages ago, is that I'm like, I just kept saying I'm a shit day trader. And then eventually when I got things automated, it's like, okay, I'm still a shit day trader, but I'm not doing it. Right. So
Yeah, you're not the one day trading. Yeah.
right. So it ends up being a different thing. So again, I'm not very much against you. I just don't think you have to go down that road if you, for whatever reason, you don't. But I think everybody should.
Yeah. All right, let's go to the next one. Do you like working with data? You're going to have to work with a lot of data, a lot of spreadsheets, a lot of back tests to be really good at this. And so one of the litmus tests I ask people, do you like Excel? That's one of the exact questions I ask people when I am considering them for coaching is, do you like Excel? Because you're going to be spending a lot of time in spreadsheets. And if you're not the kind of person that likes that, then you're not going to be good at trading. There's a guy that I have a running group that we run on Tuesday mornings. He is not a spreadsheet guy. He hires somebody to be the spreadsheet guy for him. So he's not going to be good at trading.
Yeah, no, I agree there. And then, I don't know if you saw, was it Copilot or whatever, came out with a new LLM stuff for Excel that makes it. So I would say you chose the right words. Do you like data? Because I think a lot of people, that's their one barrier. Because I don't think the barrier anymore is, are you good with Excel? Are you good with manipulating data? Because I think so much of that can be outsourced now. But yeah, you have to like going through data. There has to be some amount of reconciliation, all this. And it's like we talk about all the time, is that, yes, I'm not the one staring at the 7 monitors and hitting the buttons to place the trades anymore, but it's not like you're not working, right? You have to do the reconciliations, you have to do all this. And yes, exploring data, I think, is the thing that's more important than anything. It's not so much crunching the data, because computers and AIs can do that, but you have to be interpreting and reading and interpreting and exploring that data when it comes out, because when you're a systematic trader, it's all you got. There's no gut feel, there's no interpreting market moves or anything like that. It's the data, or it's nothing.
Yeah, I agree. It's and there's never been a better time to start doing this. If you're a data person, or even close to a data person, there's never been a better time to start trading. I mean, people think that edge erosion is happening and all this is going to take all the edges away. Man, it's hard for me to believe that'd be the case. I see no evidence of that.
No, and I don't. It will be, hopefully, like it will be like the job market every time. And every time there's been a technological change, some goes away and some gets added. And I think it's going to be the same thing with the changes in the market structure, 24-hour trading and tokenization and all this stuff that's happening. And with the rise of AI, yeah, some stuff's going to be degraded, and then there's probably going to be more opening up in the meantime. So I think the people who are on it, who are active behind it, will be totally fine. But
yeah,
that's just the nature of it. If it's not AI, it's going to be something else that comes along and completely skews the market in some way, and you'll need to kind of adapt and push forward.
For sure.
The nature of it.
All right, so the last thing on my list is the money is almost secondary. So, if you're doing it exclusively for the money, I mean, I'm not going to say that trading's not about money. Of course, it's about money. But there is something with really good traders where it's not, it's almost secondary. It's not quite secondary, but it's almost like they want to be really, really good at what they do. So the focus is not actually, like it's when they get to the end of the month and you're figuring out how, if they traded well, it's not necessarily how much money is in their account. It's how did they execute their plan? How did they execute their strategies? And did they make mistakes? And if they didn't, and they're on a constant path for improvement, the money's going to come.
Yeah, and I would agree with that. I would say that a lot of the technicians and everything I know, I'm thinking about JC, buddy of mine, he actually has, his Twitter bio is just, I solve puzzles. And that's the way I've looked at it with most people who are getting into the trading game that are successful, is they're looking at it like a puzzle. It's not so much I'm looking at this to make a bunch of money. It's more about, there's a problem here to be solved, and if I solve it, I make a bunch of money. So, there's a good motivation to solve the puzzle, but they're looking at it just like that, as saying, okay, how do I get, better at all this? And that's the thing that I think draws me to it, is I look at every time I have free buying power is there's a puzzle piece missing. And I have to find something that fits in there well, that generates me income each. And yeah, so I think if you look at it, I'm trying to avoid saying like a game, because you shouldn't treat trading like a game, right? It's serious. We're looking to make money, but and I would say it's the same as with any job, right? If you were a developer and you didn't like, solving bugs and building new things and going through that stuff, the money's only going to take you so far, right? And then eventually you're going to either lose motivation if you make enough money, or you're just going to be kind of shit from it in general. But having that zoom in ability of it, no, I really like coding and I really like solving these problems and I really like doing this, then it'll be great. And you'll probably make a bunch of money because you enjoy doing the thing anyway, right? So that'll just make you good at it.
Yeah, that's totally true. I like the puzzle analogy. I mean, that's exactly, I think that hits the nail on the head. That's, you're solving it with a systematic approach, and, create enough systems, they're uncorrelated enough, and your equity curve gets really, really smooth.
Absolutely, yeah. And is that all? Is that all you got? Because I got one. If that's your
Yeah, I've had some thoughts as we were going through this, but yeah, what you got?
Well, I think discipline outside of trading has to be part of it as well. This is just someone, if you can't stick to any sort of like exercise plan, or you can't stick to, you call it motivation, or I hate motivation. It's discipline. It's doing the things that you have to do even when you don't want to do it. If you don't have that anywhere else in your life, I think it's going to be very hard to have that in trading. I think one of the books I read from Bella at S&B, they talked a lot about how they like to hire athletes, and that was part of it as well. That it shows that they can get up at 6 a.m. even if they don't want to, and do the things even if they don't want to, and that kind of thing. I think that's a huge part of it, because people who are undisciplined everywhere are probably undisciplined everywhere. I'm not saying you have to be like a Buddhist monk and all this stuff, but if you can't do the things that you tell yourself you're going to do, then it's going to be really hard to do those correct things in like really high stress situations, which is what trading is, right? Again, like we talked about, coming in every day, you're in a big drawdown, but you don't think there's anything wrong with your systems. You got to come in the next day and you got to set up all the bots and do all the things correctly, even if you're making money. And yeah, I think that gets hard to some people out there who don't have that discipline.
Yeah, I really like that. And I think sports and athletes really have a keen sense of that. I mean, anytime you want to be really good at something outside, trading or otherwise, you have to be putting in the work. And a lot of times that work you're not going to see the payoff from that work until months or maybe years later. So to be able to do that day in and day out, when you're not maybe getting positive reinforcement each day as you do it, that's a really hard thing to do, to be able to postpone the benefits like that, and to keep doing it every day is really, I totally agree. That's very important.
Yeah. And I think you could, and you're probably doing this subconsciously anyway, but it'd also be a pretty easy thing to suss out, right? If the person's, you had a couple calls with them and they're late to every call, and things like that, I think you can pick up on and say, oh, this is just not a disciplined human being.
Yeah.
So, it's easy to be disciplined to show up for a Zoom meeting, right? It's hard to be disciplined to, to continue to hit the right button when you're down $20,000 over the last couple of weeks because things just aren't working out.
Yeah. So it reminds me so I used to coach high school cross country with my wife, and one of the things we would tell the kids is, you race hard in the woods when nobody's looking. Like, it's easy to be running hard in front of a crowd when everybody's cheering, but when you're out in the middle of the woods, you're by yourself, nobody's looking. That's when, like, we encourage them, that's when our team runs hard. Then, when nobody's looking, and you're only doing it for yourself. I think it's a great quality to have, and yeah, you're gonna I can't be on the Zoom call with you every time, so you're going to be a lot of the time alone doing a lot of work.
Yeah, and I just think it carries itself through everything. Right? If you're disciplined in one thing, you've kind of there's actually been a lot of studies about discipline as a muscle. It's why, people binge eat and things at night mostly is because right, every time you exercise discipline, it kind of tires out for that day.
Yeah.
And just like a muscle, people who have a very strong disciplined muscle can make correct decisions more throughout the day that will tire out later than someone who just wakes up and is undisciplined right off the bat. So, yeah, I think that's a big one. It's nebulous. A lot of these are, I guess, nebulous kind of concepts, but yeah, I think that's one that just kind of carries through everything.
Yeah, I think that's true. And, it is a little bit easier when you have automation that's quote unquote making these decisions for you. I mean, you've really designed the system and you've made the decisions ahead of time so you don't have to make the decisions during the trading day. I mean, it almost seems impossible to me to trade discretionarily because you're essentially just think about all the work you do to create a back test and create something that works. Where discretionary trading is you're basically doing that all on the fly. Like, how is that ever going to work, really? How are you ever going to be good at that for a long period of time?
No, and I like to use some examples of traders that we know that, like, guys like Brian Shannon is a good example of it, where he would never, I think, have a robot necessarily do anything for him. But if you go back and you look at his videos 20 years ago, it's the same thing. So these discretionary traders, I think, are just systematic traders who haven't admitted it to themselves yet. Right? They have I look for this and then I look for this and then I hit the button. And it's like, okay, well, that's a system, right? You could, in theory, get pretty close to either automating that system or automating some of it or most of it. And I had this debate, just go back with JC over beers. He was just getting mad when I called him a systematic trader. And I'm like, so you're going to wake up Saturday, what are you going to do? He's like, well, I open up my chart book and it has these ETFs in them and I do this intra-market macro analysis. And I'm like, okay, that's a system, right? And
Yeah.
you're going to look for the same. So yeah, I think a lot of these people are just in denial and they just think they have some sort of intuition, but all they've done is they've developed systems that give them some edge pointing in some direction. And the same with day traders. You go, okay, well, why do you take that trade? It's like, oh, well, this is, it's an earnings gap and the earnings were better than expected. And now it's breaking out of this range. I'm like, that's a system, right?
Yeah.
You just think, and I just think that's how. So no, I wish, I don't think there is such a thing as discretionary traders. There's just people who have put the system for a robot to do it, or people who just keep it in their brain, and it's the same thing.
Yeah. Yeah, I agree. Think back about all the bullet points we've mentioned here. I think what you mentioned at some point during our conversation here is the ability to adapt. And that's really ultimately what you're going to have to do. That's sort of the undercurrent of everything we've said here and why it's so hard, because a lot of traders will have some success doing something, but the problem is at some point you're going to have to completely reinvent yourself as a trader. And that's really ultimately the hard part. Some people just aren't going to be able to do that quickly. They aren't going to be able to adapt. They aren't going to have the tools to be able to do that. And that's where they're going to quit, just because they can't adapt. The more flexible you are, the more open to new ideas you are, without looking over somebody else's shoulder and, not taking full responsibility for your trading. Those are the kind of traders that are going to do well.
Well, and I think that comes back to, this was going to be the second one that I was going to bring up on top of my discipline. And that is intellectual curiosity. And I think that's another one just for life. Like people, and you can just tell, people who think they know everything.
Yeah.
And they're not interested in learning anything else, and they think they figured it out. They're not really interesting people, I don't think, and B, they're at some point, even if they do know everything changes all the time. So eventually you'll get to the point where they don't. And the people who are just curious all the time. They're the most interesting people to talk to when you're talking trading or whatever, and they're asking questions, and even if they're probably better traders than you, they're still trying to figure it out. And I think that comes down to it is if you're always curious, then I think you're going to be way easier at adapting than the person who thinks that they've figured it out.
Yeah.
Because if you're curious, it means you think that there's something better out there that you can kind of grab and learn some and take some away from. So yeah, I would definitely put that in the whole.
Yeah, I think so. It's sort of like you have to have humility. And a lot
Mhm.
of people that have had success in other areas of life, they're not humble. So there is a specific kind of person that is humble enough to realize they don't have all the answers. You see a lot of people have an attitude of not invented here, where if it's not their idea, then they don't think it's going to work. So
Mhm.
a lot of times with those kind of people, I'll have a strategy for giving them the idea and making them think it was their own.
Yeah. Well, and I think there's part of it too where there's two kinds of people that become really good at something. And there's one that they get really good at something, so therefore they think they should be good at everything else, like automatically.
Hmm.
And then there's other people who get really good at something and realize all the work it took to get good at that thing, and
Yeah.
realize they're going to have to put the same work in to get good at something else. And yeah, those are completely different. And one of those people will probably just never get good at anything else again, and the other one will, because they're like, oh man, I'm like the greatest surgeon
Yeah.
out there. Then they look back and it's like, man, I've been working a long time to become a really good surgeon. So if I want to invest well, I'm going to have to give some amount of the same amount of effort and the same amount of patience. Where the other one will be like, no, I'm the greatest surgeon out there, so I'm going to know more about the market than right, which intellectually makes no sense, but we all know those people exist.
Totally. Yeah. And, the people that are humble, what I see in them is a lot of times most times they're better than they think they are. So those are the kind of people that I really like working with, because I can tell that you're very close to being a really good trader,
Hmm.
and those are the people that are really fun to work with, because they have a lot of skills, but they don't have the confidence yet to understand what to do. They don't have the basics down, or they've had some success, but they're hitting foul balls.
Yeah.
So yeah, those are the kind of people that I really enjoy working with.
Well, and it was funny. So Renaissance Capital, which is like the greatest hedge fund of all time, pure quant firm, right? Just everything was math based. He, by for this very same reason of a lot of this, would not hire anybody with any knowledge about Wall Street whatsoever,
Yeah.
because he wanted to bring in people. To go back to the humble and everything, he wanted to bring people who kind of knew they had no idea about any of this stuff, because then they would be asking questions and exploring and looking for data. And so everything he hired was like computer scientists and mathematics and physics and all of this kind of stuff. Because yeah, he's like, as soon as they think they know that this thing should move because someone said that, they're out of the firm. And again, you can look up. It's Man Who Beat the Market or Man Who Solved the Market. It's a great book by him,
Hmm.
or about him. And yeah, it was the same thing. He's like, I want people who understand they know nothing, so that they can just get into the data and start to try to figure it out, as opposed to the people who think they know something and right there's no hope for them.
Yeah, it is tricky, because if you've had success with something else, you do think, oh, okay, maybe I figured this out. But a lot
Hmm.
of times, I've worked with a lot of those guys, and a lot of times there's a lot they have to unlearn. A lot of that they think they know, that they literally have to unlearn. I've worked with PhDs in data science, and they've worked in another domain, and now they come into trading and think that it can just all that they've learned can apply to finance and trading. And
Yeah.
a lot of what they learn in the other domain, they have to literally unlearn to be good at trading.
Yeah, and you could say the same thing too about people who are like Wall Street guys, right? Or economists would probably be really bad traders, things like that, who believe that they understand that these relationships exist, and you just go,
Yeah.
okay, well, show me, right? Test it, like give me a model that says if you do this, then that happens, then right, go right ahead. And yeah, so I think it's a lot of that, in which you have to reprogram from both sides. I could see the data scientists, and I could also see like the Wall Street guys both having to reprogram to say, no, okay. I just think going in, and you know, I host a live stream, and I say this all the time, is that I don't know anything. I intentionally try to know as little about news or anything like that as possible, because I want to just keep myself as a mind of, I'm just going to let the data tell me what to do, and just going to leave the rest of it behind.
Yeah, I love that. Well, hopefully the listeners have gotten something here that they can actually apply to their trading, or move themselves further down in their trading journey further along.
Well, let's just leave them with. So, what would you say if there's someone who listened to this and they didn't tick any of the boxes at all? Like, are you screwed? Go do something else, or work on yourself, or what do you think?
Yeah, I would say if you don't like data, you're going to have trouble. But let's assume that they do like data, but they haven't had success at trading yet. What I would say is, you really need to take full ownership of what you're doing. That's probably where they're getting stuck. And that's probably the biggest thing they can do, is take full ownership of what you're doing. You're probably looking over somebody else's shoulder. You're probably looking on Twitter and seeing people being successful, trading a certain strategy and trying to emulate them. Stop doing that. Stop looking at, look at inside yourself. A lot of the ideas that you've had in your head are probably profitable if you just apply them in the right way.
Right.
So that's what I would suggest.
Yeah, I was gonna say the same thing. As long as you are interested enough or passionate enough or whatever you want, and you can see yourself doing the boring parts, which is, the data and the reconciliation, all that, then the rest of it you just gotta figure out. You'll get to it. If you don't have the discipline, you don't have the passion behind it, then just find something else to do. But everything else I think you can figure out. But that was a great one. We're using a new recording software, so I didn't know where the clock was, but we've been going for some time. As always, I'm Michael Noss.
And I'm Dave May. Talk to you next week on Line Your Own Pockets.